Thank you, everybody. Thank you, Lori. As she said, I'm Christina Hartley. I've been in the medical field for about 22 years, been with Valley Sleep Center for going on 3 years. So very happy to be here and happy to go over all this information with everybody. So what are the differences between HSAs, HRAs, and FSAs? Our objective for today, what HSA, HRA, and FSA stand for, how each of them work, how they compare with each other, and hopefully to be a little more informed about what's out there and feel more comfortable using them. I do have a couple of disclaimers. This is for educational purposes only. I am in no way, shape, or form an insurance advisor, a tax advisor, nor am I here to give health or medical advice. So let's start off what the acronyms stand for. HSA is a healthcare savings account. HRA is a healthcare reimbursement account or a healthcare reimbursement arrangement. And FSA is a flexible spending account or flexible spending arrangement. So first we're going to start off with what is an HSA or a healthcare savings account. A savings account that lets you set aside money on a pre-tax basis to pay for qualified medical expenses, such as your deductibles, co-pays, or co-insurance. These may not be used to pay for your insurance premiums, though. There is limits, and these are set by the IRS each year. And an example for 2020, an individual could contribute up to $3,550, or a family could contribute $7,100. Again, these limits are based on your employer and what they set, so please see your benefits handbook or your HR representative for specific details on your plans. These are offered through some insurance companies or banks and other financial institutions. Again, see who your plan administrator is or your HR representative. But how does it work, you ask? An HSA typically works by you deciding how much you would like to contribute each year. And this is determined when you're determining all of your other benefits for the plan year. Again, it does depend on your employer, but it's usually split. The amount that you wish to contribute for the year is split by how many paychecks you have per year and is deducted in each paycheck. You can receive tax-free distributions from your HSA to pay or be reimbursed for qualified medical expenses you incur after you're eligible. When you set up an HSA through a bank or other financial institution, they may provide you with a card to be used like a credit or debit card to pay at the time of service. Or you may have to request a disbursement from the HSA plan, and they will send your provider a check on your behalf. Your provider or store that you're purchasing items from must accept HSA accounts. Some will request that you submit for reimbursement, but will always require an itemized statement and or receipt. So please make sure you keep your receipts, and you can always contact our billing department for an itemized statement. What is an HRA? So this one's going to be a little different, and it's all in the name, healthcare reimbursement arrangement, whereas the last one was a savings. This is for employer-funded group health plans, which are reimbursed tax-free for qualified medical expenses. Now, employer-funded group health plans are typically larger companies that pay for their own employees' benefits. They just go through insurance companies for administrative purposes only. The employer funds and owns the arrangement. So exact details will have to come from the employer. How does an an HRA work? When set up through a health plan, they may make the payments directly to your provider on your behalf. After they've processed the claim and determined there was an amount you would have owed, as long as there are funds in your HRA. There's typically no other documentation or forms needed, but as always, please refer to your benefits handbook or check with your HR representative. I wanted to put in a couple of examples of covered medical expenses, and this is by any means not an all-inclusive list. So obviously you've got your co-pays, deductibles, co-insurance. It pays for chiropractor treatments, eyeglasses, contacts. I'm not going to go through it, but I just wanted to give you an idea. Some of the non-standard things. So x-rays, diagnostic testing, anything that's considered medically necessary. And this list is actually on the internet, and I have some resource links for that if you want to request that. Some examples of exclusions, again, not an all-inclusive list, but wanted to give you an idea. So cosmetic surgery, daycare, even if it's for a parent to be seen for a medical reason, it is not reimbursable or payable through an HRA or an HSA. If you're not sure, by all means, please consult with your tax professional. They know exactly what items qualify and what doesn't. There's also a list online as well. The last one is an FSA, or a flexible spending account. An FSA is an arrangement through your employer that allows you to pay for medical expenses with tax-free money. You decide how much you want to put into this account up to a limit, and it's determined by your employer. For funds not used by the end of the year, you may lose any money not used. Some employers may have the option to allow one of the following, but not both if you haven't spent all of your money by the end of the plan year. They'll either allow you to carry it over to the following year up to $500, or you may be given an extra 2.5 months to spend the money. Again, check with your HR representative, your benefits book. It's going to be very employer and plan specific. So now, how does an FSA work? You may be issued a card to use, like a credit or debit card, to purchase items medically related, and there is a list from the IRS. It is a separate list that from the HSA HRA list, and I'll explain in better detail in a little bit. Or you may pay your provider directly using your card, as long as your provider or store accepts FSA. Again, the amount determined will be preloaded on this card that you've determined when you've selected all of your benefits for the year. It will be preloaded on your card to be used throughout the plan year, but you're still paying it in increments throughout the year. Some items may require an itemized receipt or a prescription and a letter of medical necessity from your doctor. A safe bet for an FSA is to always keep a copy of your receipts and get itemization when possible. Again, there is a separate FSA approved covered medical expense list. It is online, or you can check with your FSA administrator. You can also check with your tax professional. So a couple of things that are not on the HSA list that are on the FSA list that are covered, I wanted to kind of point these out. This includes over-the-counter medications. You can buy Band-Aids, Q-tips. So if you're running towards the end of your plan year and you have a little bit of money left over to spend, go pick up that hand sanitizer, the Band-Aids, Q-tips, first aid kits, just a couple of things that you can definitely use your money on before you lose it before the end of the plan year. Now, I did a side-by-side comparison of all three. then the big thing that I really want to highlight is the benefits, which is at the bottom. For all three of them, they are all tax-free money that you put into it. So this is a huge benefit. It's a huge savings to you. And it's also an excellent plan. I know that when they first started, they were big and scary and nobody knew how to handle them or what to do or what the benefits were. But the tax-free benefit is always great because your $100 that you just earned at work, you now have $100 to go spend on medical expenses instead of $85 or $88, whatever it is after taxes that $100 really is. So it really is a great benefit to everyone. The only time I would say it's probably not is if you don't have a whole lot of health expenses. But if you do, this is definitely, make sure you check with your employers, or for the HSAs, they're even offered through the marketplace plans and individual plans. So you don't have to be it doesn't have to be an employer group that you're getting your insurance benefits through.